So, dear students, welcome back to Shasha's virtual classroom. So, let us start with the next lesson, that is chapter 1 P4B. Okay, so we had stopped, we had done in the previous class, we had done till here. So, we will be starting with this. So, complete the columns to show the effect of the following transactions. So, basically, this is related to accounting equation question. So complete the column to show the effect of the following transactions. So we pay a creditor 70 in cash. So we pay a creditor $70 in cash. So what happens when we pay a creditor 70 in cash? Obviously, who is creditor? Creditor is a liability, no? So creditor is a liability. So liability will come down by 70. So all the amounts are in pounds. So pound 70. So what is the other effect? Even the assets, even the cash will come out because cash will fall because we are paying. So cash is going out to pay sundry creditors. So both cash is going out and liability is paid off. So both will come down. So it will not have any effect on capital because there is no profit element or loss element. So it will not affect the capital account. Okay. What fixtures pound 200 paying by check? What fixtures pound 200 paying by check? So what's happening here? So see, asset will come in. So what is the asset? Fixture will come in. Fixture will come in. That is 200 will come in. This is fixture, and money will go out. So money will go out from bank. So it is also 200. So bank 200 will go out from bank. So what is the net effect? Net effect is nil at all. So there is no effect on assets because one asset is increasing, the other asset is decreasing. So there is no effect on assets. No, no effect on liabilities as well. No effect on capital. Goods, bought goods on credit 275. Okay, bought goods on credit. So what will happen? So stock will increase. So inventories, goods. Okay, inventories, goods or stock, whatever you call it as. So they will increase. It is plus. Okay. So liabilities also will increase because we have to pay. You have to pay them later on. So creditor on credit means you have to pay them later on. Even this will increase. This also will increase. So you can say this is coming down. This is going up. Assets are also going up. Liabilities are also going up. So this is coming down. Liabilities are also coming down. So for the second one, there is no effect. Okay. So then the proprietor introduces another 500 cash into the firm. So what is happening here? Cash is increasing. So 500 pounds are increasing because the cash is coming into the business, right? 500 pounds are coming in. So similarly, capital is also increasing. So 500. So capital is also increasing. It is also increasing 500. J Walker lends the firm 200 in cash. So what is happening here? Walker is a person who is a lender who is giving. So it's a liability. So again, cash is increasing. So cash is increasing by 200. Cash is increasing by 200. And even loan liability. Okay, liability is a loan. We have to pay back. No, if we take money from J Walker, we have to pay him back, right? So we have to pay him back 200 rupees. So interest is another issue that is a different aspect. So we have to record it separately. But as of now, cash will also increase and liabilities also will increase. A debtor pays US dollar 50 by check. Oh, okay. So what is happening? A debtor pays by check. A debtor. Who is a debtor? Debtor is a customer to whom we have sold goods on credit. So he has paid us money. So what will happen? Debtor cash will come in, no? So bank account will increase. So bank account will increase by 50 bucks. Bank account will increase by 50 bucks. Bank. So and what will happen? Debtor pays off. He had to pay us. So his account will come down. That even that is debtor. So both are assets. So one asset is increasing, other asset is decreasing. So the net effect is nil. So the net effect is nil. Okay, so then we return goods costing $60 to supplier who will whose bill we had not paid. We return goods costing 60. We return goods. So what is happening? Goods are going out back to supplier. So goods are going out. Goods are going out. Stock inventory is going out. And whom we are giving it back? To a supplier. Supplier, who is supplier? Supplier is a liability to from whom we had purchased goods on credit. So even that will come down, right? So even that will come down. So capital account it will not hit. So a capital account it will not hit. Okay. So then bought additional shop premises paying 5,000 by check. So what is happening here? Money is in premises is increasing, whereas bank account is decreasing. So there is one increase of an asset, there is decrease of another liability. I mean the same asset. So asset is increasing, one asset is increasing. Which asset is increasing? Premises is increasing, whereas check, and that is bank. Okay, so bank is decreasing. So the effect is net effect is nil because it is hitting both accounts are hitting asset account itself. So there is no effect on liabilities, no effect on capital. So this is what is this one. So what you can do is you can just try this question, complete the columns to show the effect of following transactions, and this is a homework. Okay, so this is a homework for you. Please try doing this so that if you have any doubts, please let me know so that so maybe we will work out the solutions in class. What do you say? C1P5 or C1P6 if you want. Okay, so unless otherwise you let me know. I am not going to do this. It is assumed that you can do this on your own. So sorry, but I need you also to try this problem on your own. So otherwise, and there is no point in me doing everything and just you are watching like a movie. So that's not going to happen. So you have to put your efforts and you have to let me know that even if one comment on in the section of this video will make me happy. So I will be happy to post the answers for this. Okay. So next question. Okay. So 1.13. So that is G Brown has the following items in her balance sheet as on 30th April 20 dash capital 18,400, Kratos 2,100, fixtures 2,800, car 3,900, stock of goods 4,550. So debtors 2,780, cash at bank 6,250, cash in hand 220. So during the first week of May 20-8, she bought extra stock for goods 400 on credit. One of the debtors paid to 920 by check. She bought a computer by check, pound 850. You are asked to drop a balance sheet as on 7th May 20-8 after the above transactions have been completed. So you are supposed to drop a balance sheet. to supposed to draw up a balance sheet. Okay, so let us see how to prepare a balance sheet. Okay, so this is what the information that has been given in the question. So these are the assets and these are the liabilities that are given. So they are asking you to prepare the balance sheet. Okay, she bought extra stock for goods 400 on credit. So she bought extra stock. So stock means this one 450. How much? Worth 400. On credit means plus 400. So this will increase and this will increase. Both creditors and stock will increase. Next one. One of the debtors paid 920 by check. One of the debtors paid 920 by check. So one of the debtors paid 920 by check. So this will come down, but this will increase. So 920. So then the next one. So what is it? She bought a computer by check 850. She bought a computer. Okay, so computer is not there. Computer 850 by check. So 850. So minus 850 minus. So this is the new balance sheet. So the net effect. So this will become 2500. So this will become 2500. So you can just so this will become 4950. So 2780 minus 920 is how much? 60. 7 minus 9, 8. 7 minus 9 is 6. 7, 8. So that I don't commit a mistake again. So take some time, don't commit silly mistakes. 2780 minus 920, 1860. 1860. 1860. So this will become bank balance will be 6250 plus 920 minus 850. 6250 plus 920 minus 850. So 6320, this will become 6320. So all other figures will remain same. So this is the answer for this question. So whatever question has been asked, this is the answer. This is how you have to do the problem. Always liabilities will come on the left side and assets will come on the right side, or you can write one below the other. So whatever it is suggested by your school teacher, you can do it. So it can be presented in different ways. The ultimate amount is the net amount, the net result. Okay. So this is over. So then this problem is done. So you can try the next problem. This problem is as a homework. So you can try this problem as a homework. Then you can get back. So okay. So this is the end of the lesson. So we have done almost all questions from this lesson. So this one you can try on your own, and please let me know if you have any doubts. Please let me know as a comment. We can so we can you can look for the solutions in C1P5 or C1P6 in the next class. So in case you have any doubts or if you found any mistakes in doing this, please let me know. Even we are humans, and mistakes, silly mistakes are going to happen, but intentionally, nothing will be taught wrong. So you can be rest assured. So all the best. So we will catch up in the next class.